Hi there, and welcome to the second edition of how to go about financial investment. Okay, so today we'll be talking more in detail about stocks. So last time we talked about it in a, brief. We talked about what exactly is stock and how exactly to deal with it. So today what we'll talk about is what exactly do you need to know or be aware of to go about investing in stocks. You could have heard about multiple opinions. Hey, go ahead and invest in stocks, you would make a lot of money. And there would be another contrasting opinion saying that, hey, don't, stay away from stocks. Uh, don't even go near that because that's the most riskiest thing that you could ever do in life. Again, there are pros and cons to this. So let me try to break them down so that you get a fair idea as to what it is all about and whether you should be able to, whether you have the acumen to really go about investing in shares or stocks for that matter. So, again, this is just a video which will guide you to certain decisions. Again, what you would do is something that that you understand and basically based on your understanding you can go further investing. Okay, so basically what exactly is stock? Let me recap. So let's assume that there's a company XYZ which is trying to which is having around 500 employees and its turnover is around 2 crores. So now it wants to expand, it wants more money, so it wants to invest another 5 to 10 crores. Now how does it do? So basically it can talk to some capital venturists and then they can pour in some money. The other way out is basically it can go the loan way, where you can get some corporate loans and stuff like that, and you can use that. But the other option that is really opening or that has been there since ages is the IPO way. That's the initial public offering way. So this is something that is a very legal way of collecting money from the public and then utilizing it, and you make public the shareholders or the stockholders. So basically what it means is a person when he buys some equity in the company, that means he would have some controlling stake. Again, lesser the number, less the control. Okay, more the number, more the control. Okay, so this is the basics of stock. Say I want to have 10 crores, I divide that into the based on the face value and based on the value that I want to keep for each share. I would basically price the given stock and I would divide the stock into and the number of stocks that I want. Then I go for an approval from SEBI, and then once the approval is done, I would come into the market, and then I would start. Basically, I would be listed on the NSE or the BSE. What is this NSE or BSE? NSE is the National Stock Exchange. BSE is the Bombay Stock Exchange. So basically, in India, currently, these are the two primary stock exchanges that we have. So again, you start getting listed. Now, say I am a person who is interested in stocks. So I go through the company, I figure out that the company is doing good, and I feel that yes, it is good to invest in this company. I would say now I want to invest in the company. What do I need to do? As a newcomer, what do I need to do? That's the question. So you need to first and foremost have a demat account. So how do I get a demat account? All the banks nowadays provide a demat account. What is demat? Demat is nothing but a dematerialized form of the stock that you own. Earlier there were pieces of paper where you were given information about how many stocks you were owning, and when you sell that stock, the paper used to go to the stock exchange, and then you were either giving it away, or so there would be another person getting that paper. Now, what they have done is in order to reduce the fraudulent elements and criminal activities, they've converted it into something known as a dematerialized form, where you don't need a paper. Everything is online. Okay, so now when I say demat account, it's just like another savings account or another account where you can figure out what all stocks you have and you can manage them. There are multiple banks which help you. Apart from banks, there are other agencies, stock agencies like Carby or Geojet Paribas or Share Khan, which helps you in getting the demat account. Now once you have the demat account, once you equip yourself with the demat account, then you have the idea of what stock you need to buy. You can go for the IPO, and then you can say I want to buy a certain number of stocks. When I say number, there would already be a number which is associated when a new stock comes into picture. So basically, it would be there would be a banding. You can buy a minimum of 25 stocks. You can buy a maximum of so and so stocks. That ranges to certain amount, say between 1,000 to 10,000 rupees, something like that. Now you can decide where you want to park, where you want to stop yourself. You can maybe decide to buy a 50 stocks or maybe 500 stocks. Okay. Now based on that, you apply, and you, I mean, during the time of allocation, there could be a chance that you don't get any stocks allocated, or there could be a chance that you get all the stocks allocated. Now once this is done, you are basically the owner of those many number of stocks that comes into your bucket. Okay, so basically once you have that, say the price that is getting quoted is say they've charged 250 rupees at a face value of rupees 10. Okay, now when it comes into the market, okay, there are two concepts again: subscription and oversubscription. What I do is subscription. When too many people opt for the same stock, there are chances that it gets oversubscribed. Then my chances of getting the stock reduces. Okay, so that is one more concept. When you read something known as this stock is getting oversubscribed by 1.22 times, 5.22 times, that only means that they were expecting so many people. It's got increased by 5x, 5 times or 5.22 times. Okay, so that's what it means. Okay, so once you say, let's assume that you're lucky enough to get the stock, and then when it gets quoted or listed on the NSE or the BSE on that D day, the chances are it could go double, it could go slightly up, it could go slightly down, it could go negative. I mean, it can go any way depending on the quality of the stock. That when I say quality, it could be multiple factors that is influencing the market that it belongs to, the brand that is there around it, multiple factors. Okay, now say you have got the stock, you have an option of selling it, you have an option of keeping it. There's something known as there are long-term investors, short-term investors. You can decide to become a long-term or a short-term. The catch, there's a catch. When you're a long-term investor, say you keep a stock for more than a year, the tax element gets negated, means you don't need to pay tax. But when you sell it within a year, that is considered as capital gains. So that you will have to again declare. Nevertheless, in both the cases, you'll have to declare. But here you'll have to end up paying taxes when it is within a year that you try to sell. Okay, that's another aspect. Now, what are the various aspects by which you can decide whether a given stock is good or not? Okay, so let's pick up one after the other, and let me take you to the website where we can check the details. So when a stock is there, you first and foremost look into the company's website. You go and figure out what is the activity that, say, let's say you're talking about Infosys. Infosys currently is getting traded at around 900 rupees. Earlier there were cases where it was trading at around 3000 rupees. Due to various reasons, it's come down. Of course, you need to figure out whether there's a potential in that or not. How do you do that? You go and check the website. You see whether you see the last 5 years balance sheet. You check the audit reports. You check the profits that they are making. That you get a trend in the profits, whether it's decreasing, whether it's increasing. How is their guidance value? What is their debt versus the overall net worth? So, and there are multiple other ratios that you need to consider, and then figure out how is it performing when it is compared against the peers. So all these things would be, at least to an extent, you can figure out on the company perspective. When it comes to peers and all, there are multiple websites which give you a plethora of data based on which you can figure out whether this company is doing good or not. Okay, so let's check what are the various websites that are available. I personally go by moneycontrol.com, where you can get a brief idea as to whether the company is doing good or not. Let's go and check out how it behaves, or how what sort of information you can get over there. Okay. I hope you are able to see the desktop. And let's get into the share. Okay, this is the money control website. Now I am searching for the company. Let's try again. Okay, let me try another company. Let's see if let's say Mindtree. Yeah, not sure if there was a problem with that entry. Okay, so let's talk about Mindtree. Okay, so this is another company where currently you can see that it is trading at around 453 rupees. So you can see the 52-week the low and the 52-week high. See the kind of contrasting difference that is there. The 52-week low is around 400 and the 52-week is at around 1600. The potential that it has is to grow 4 times, and it has already done that once before. So that is very important, you know. You should be aware of the price, the lower band and the upper band, and where the current pricing is. If it is somewhere in the middle, or it is somewhere at around 3/4 or sorry 2/3 or 1/3 of the company, I believe that's the right price that which you can buy, because there are chances of it falling, but not too much. But if it increases, it will go 2 folds or 3 folds. Okay, that is one of the major things that you need to consider. Let me again, I wanted to get a picture in picture view. Let me get that. Okay, hopefully I'm able to do that. Now let's hit back the website. Okay, now I was talking about the pricing. Let's talk about the volume. The volume, if you see, it basically talks about the volumes that is there at a given time. So today, I think there has been a huge reduction in the volume. If you see, 30 days before, there were about 2 lakh. The average was around 2 lakh, but 10 days before, the average has come down to around, it has increased and it has fallen. What could be the reason for this? There are multiple reasons for one stock to behave. It could be the Trump factor, the IT falling down. It could be the demonetization drive which has come in. So a person as such will have to be aware of all the things that is happening around him, be it IT centric, be it non IT centric, be it economics centric, be it the government centric. All the policies that is happening that is going to influence that particular company or the segment has to be kept in mind before he buys the stock. And also you need to be aware of how the company is behaving or is doing or performing. Okay, this we talked about volume, we talked about 52-week low, high. We need to check this graph overall how the performance is. Has it come down to its lowest? Is it going to pick up or not? That again is dependent on the high 52-week low, high. And then you come down further, you talk about the market capitalization. It's a decent 7,600 crores where it is market capitalization. P by E is fairly low. P by E is nothing but the price per earning. So the general trend is the lower the P by E, the greater the opportunity. Okay, so you need to keep it between less than 10 or less than 20 for it to do well. That's again something that I understand or I have been told by various other investors. You can follow your own. There's no hard and fast rule that you need to go by this rule or that. It's all about your conviction, and it's all about how you understand the game. Based on that, you can go and invest. The book value is always that something that will give you a fair idea as to where the stock is really worth. This is worth something more than that. We wouldn't even want to talk about it. And P by E being low, the potential is slightly higher. The dividend factor is too good. If you are a long-term investor, you would want to worry about the dividend because you would also want to earn some money without even selling it. dividend is a nice way of earning money. Okay, if you have good stocks which are giving you dividend, you could be in a situation where you're getting a monthly income of around 5 to 10k, which is certainly not ignorable. Okay, so similarly industry p bar e is also very important. The higher the industry p bar e, the better it is what I understand. Okay, again, so there are the face value. If you talk about face value, should generally be the face value with which it starts is around 10. Okay, as and when the shares get divided, I'll take that up in the next session. What does it mean when we say divided? Okay, as and when the stocks get devalued, it goes down to 5, 2, 1, and all those things. So it's better to have the stock which is not devalued or which is at 10. Okay, that helps. Again, so apart from this, there are various other parameters: historic prices, overall how the current volume trend has been, overall how the percentage gain or loss has been. These all these things help. Has there been any negative comments on the market, in the market? How's the news around that company doing? Is it good? Is it positive? All these things matter. Then apart from that, the things like stock advice, there are people advising. I would not say that this is the right advice that you get. You can always take that as a catalyst. It would either enhance your chance, richen up your chance of getting closer to buying that, or it would make it slower. So take it that way. But your decision is what you decide. Based on that, if you have decided to buy Mindtree, if they say buy Mindtree at this price and the price is around that, it's only going to help you decide faster that you need to buy that stock. Okay, so again, if you see infrastructure as a service, I mean there are multiple factors based on which companies run, and they will be doing good. Okay, now, and this also matters, the financials matter. You need to check whether there's a net profit, how it is doing in the last few months, few quarters, how is the debt looking like. So all these things matter. So again, peers is what I was saying. You get a very direct bird's eye view of what is happening around the companies of similar nature, whether it's doing good compared to that. Shareholding pattern is a very important thing. Reason is, if you see a trend, an increase in the trend, what promoter is doing, if there is an increase in promoter buying stocks from the market, that means that there is something big that's going to happen. You can also invest. But if the promoters are selling it out, as in this case you see it has been a constant reduction, it means that maybe stock is going to not do good in the near future. It might take some time. So again, you need to decide. If the mutual funds, if big fund houses are taking the stocks and they're increasing their number of shares, that also means that mutual funds are going in and giving a thumbs up to this stock. Okay, these are various information that you need to decide. As I was talking about the company information, so you can go to the website, you can go to see the, I mean you can see the people around who are heading this, how they are, how their behavior is. I mean all these small things matter, because there's a small wrong strategy and the company is going to get doomed, and a small good strategy, the company is going to do very well, which internally is going to reflect on the numbers. Okay, the comments also matter. You get a fair idea as to where the investors are headed, whether it's doing good or not. Again, as I said, do not decide only based on this. It should act as a catalyst. It can either enhance your chances, or it should either it could slower the chances. This is what is very important. Okay, so this is what are the various parameters that will decide how the stock is, and based on that you can always take a decision. Let's go back to the normal mode. Okay, let me switch back to cam. Okay, I'm back. So I hope you got a fair idea as to how to go about deciding on a stock. What I said is again a guiding set of principles. You can always decide, you can always go further and collect materials and read about it. If you are I mean, how do you invest? I would not suggest investing huge amounts. There is SIP in mutual funds, which is nothing but systematic investment plan. So I would try to follow a similar model here. I mean, there's no what to say. There's no model as such which is given by any bank. You can follow your own SIP plan. Say you can say, hey, let me take a quarter each, and let me invest say 20,000 each quarter, and let me see which stock is good. Now, how do I decide what is the quantity? I can decide to go with a blue chip stock or a mid variant or a penny stock. There are multiple websites which give you information on each of the stocks. If you want penny stocks, the volumes are more, but the risk is even higher. If you want to go for a mid cap, though the volumes are less, the risk is kind of mediocre, and the returns that you get is also mediocre. But in a penny stock, if you really are lucky, and if it really is a multi-bagger stock, you are in for a big surprise, my dear folks. There are people who have had 800 to 900% growth in a given stock, where 10,000 has become a lakh, or 10,000 has become a crore. There are chances. Again, it's not going to happen in a few days. It's going to happen in a few years. You need to be patient enough. You need to keep an eye on the market. You need to keep watching the trend. So there are multiple factors which define how you can go about buying a stock. So this again, what I meant is will help you decide whether you want to go for this company or not. Apart from IPO, what are the other options? You can also go for secondary market. You can directly get into the market and figure out the market price and then buy the stock. It would either keep increasing or it would either keep decreasing. So based on that, you can maintain your own portfolio across various segments, and then you can manage. Of course, nowadays banks are providing customer managers or customer relationship managers who help you take a decision. My suggestion is, I would say nobody else apart from you can take a decision. Don't depend upon them completely, because if something goes wrong, there is always a clause saying that they will not be responsible for everything. They can only guide you. So better you own up your decisions, and you take decisions on your own. Invest small, start small, then go big once you have a clear understanding of how it is. Yes, there are factors which makes stock come down. Don't get kind of tense, don't get confused. It is a very long process, the learning curve is huge. There are times when the market is down, there are times when the market is completely up. So when do you invest? That's another question. When do you start? There are people who start when the market is high. They think that, oh, I can make a lot of money, I can enter, and suddenly the market falls. It's law of averages, my dear. So the problem is when you start big. I mean, when the stocks are doing good and you invest, naturally it's going to come down. When the stocks are doing bad, you would not want to invest, because you would feel that, oh, my money might go. It can. I mean, there are chances that it will not go further down. It's only going to go up. The bell curve applies here also. So again, there is a time when it is low, and there are chances that it will start going up. That is the time you can invest. When is the time I need to sell? There's no correct time as to when you can sell. There are times when the stock is doing good, but the market is not doing good. There are times when market is doing good, stock is not doing good. So there are multiple factors. There is no one theory that will give you a sure shot way of making money. It's a constant experience. It's a constant learning curve. I think you need to put in your time and energy towards it. Then only you can end up making money. Effectively, all said and done, I have not seen conservative investors make more than 12 to 14% or maximum 50%, 15%. You need to be a keen watcher to really make good profits out of it. Maybe 30, 40%, double your money. All that can happen. That is, the stock is the only place where it can happen, nowhere else. Of course, if you are talking about futures, options, there are derivatives and all. That is something that even I would want to learn and try. Currently, even I have not tried. So this is something that I know. I thought I should share with you guys. I have a few more topics that I want to bring out. Please subscribe to get more information on the other financial investments. write to me at darshanmr@gmail.com, drshmr@gmail.com for more information. It's on the screen. So again, all said and done, this is a guidance video. You are on your own when it comes to taking decisions, but of course you can take guidance from 100 people. There's nothing wrong. And but when it comes to taking a decision, it's your money, it's your decision, you need to own it up. Okay, I have owned it up. I think I'm not doing great, but I'm fairly okay because it's a learning curve, you know. There's nothing wrong in trying. Trial and error always gives you more experience, and there's nothing wrong in learning, but never hesitate. At least you have tried it before you say that it's wrong or good. People don't even try and they keep saying this is right, this is wrong. That's not correct. So let's try it out. I wish you all the best in your trials for stocks. Try it out, see how it goes. Don't, I mean, I would say start small. Keep it at a minimum when it comes to risk. As and when it comes, you can further improve. Okay. Thanks, folks. Meet you again. I'll come up with another video sometime later. Subscribe, please subscribe. Okay. Thanks. Bye.